What's up guys, Pat Alexander here, and today I'll be revealing the moving average trading strategies and secrets that no one ever thought of. Actually, I'll be exposing huge YouTubers about their trading strategies and how they are misleading the beginner traders. Now, I'm not really exposing anybody, I respect the work of all content creators. However, moving average is a tricky indicator and you should be really skeptical when looking at strategies with moving average. I will prove to you why, and let me go straight to the point. So what usually beginners do when they learn about moving averages, they go to Google or YouTube to look for moving average trading strategy. And check this out, the first result comes from Rainer Theo with 2.3 million views, and the second strategy from YZ Trade, or I don't know how to pronounce that channel, 2.5 million views. And then we have the best moving average strategy for day trading with over 700,000 views. So these are millions of views, guys. And what usually people think when they see these results is, oh, this is a huge YouTube channel with a lot of views, it must be profitable. And before recording this video, I have wasted about 30 minutes of my life to check these videos. And if I have to start with the first one, the moving average secrets from Rainer Theo with 1.6 million subscribers, I can tell you he's a good YouTuber with so many subscribers. Is he a good trader? I have no idea. So around the middle of his video, he talks about the 50 moving average, exponential moving average. And he demonstrated on a few markets, but when he came on the Brent crude oil, he showed it on 4-hour chart and he uses exponential moving average. He says that we should be trading as closest as possible to the moving average. So if the moving average rises, we need to look for buying opportunities close to that moving average. And when the moving average goes down, we should be looking for selling opportunities around the moving average, which sounds good. But first things first, in trading, we should have very precise rules. It's mathematics. Close to the moving average doesn't mean anything. It should be really a precise entry signal. However, let's make a test with the backtester of EI Studio. I will add the moving average. I am on Brent crude oil H4 chart. I will switch to period of 50 and I will go to exponential moving average. Now for the rules to enter, we have MA rises, MA falls. The bar opens above moving average after opening below it. It's a clear signal that we have a cross of the moving average. So the bar opened below and then the next bar opens above the moving average. That's a clear confirmation that the price actually crossed the moving average. Then we have the opposite. MA changes its direction upward or downwards. There is no rule. We trade close to the moving average. How close, guys? So trying to make his strategy a little bit clearer, I will select the bar opens above moving average after opening below it. So we need to look for that 50 moving average that is rising. I will accept that and I will add one moving average more, which will confirm the direction. So again, 50. And I will stick to moving average rises, exponential, I will hit on accept. So we have one that confirms it is rising, and the other rule that we should open the position whenever the bar is above the moving average and the previous bar is below the moving average, right? So this is the closest we can get to this #1 strategy on YouTube. Now, what you can see, a clear loss on the balance chart. However, I took the time to modify a little bit that strategy, and I have played a lot with that strategy builder. So if I add stop loss of $10, here is in pips, so 1000 is $10 and $30 of a take profit, and I accept it. And I exit at every bar opening, you will see that this turns into a profitable strategy. Okay, but this is huge. Close the long position at a bar open. This means that if we enter the trade, so here is one trade, you can see the moving average is going down. On the opening of the bar, not when we are close to the moving average, but on the opening of the bar. After a bar that was above, we are selling, and on the opening of the next bar, I closed the position. So I'm really trading just one bar. Okay, let's have a few more examples. Right over here, profitable. Let's check the opposite case when we are in a long position. This is the situation. We have a bar that opened below the moving average. The next one is above, so it's a confirmation to buy. And on the opening of the next bar, I immediately close the position. And if I scroll the chart, you will see some more examples. So right over here, I have a few. And right over here, I have two nice. Actually, that's another nice trade and another nice trade. So let me go back to the editor to see that we actually had 15 great trades for the last, 2-3 months. But if I choose a longer period of time and I go back to the strategy, you will see that in the long term, that's a really losing strategy with 852 count of trades. And this is backtesting it since 2013 up until the moment 1st of September 2022, a very losing strategy, right? And I did play a lot to figure out how I could possibly make this strategy profitable. And to be honest with you, I have no idea how to turn it into a profitable strategy. The next result that comes on YouTube is the best moving average trading strategy. And if I open it, you will see that by the end of the video, they expose their strategy that actually includes a lot of trend lines and price action techniques. And we have again the 50 exponential moving average, looks like a favorite moving average for the YouTubers. And they show some great setups that I cannot even replicate with a strategy builder, because these guys actually pick perfect examples to demonstrate their strategy. I'm sure they have spent hours looking for these perfect examples, which will not happen probably in the near future, or maybe never. One of the other results out there is another best moving strategy for day trading Forex. And with this strategy, they explain that for the pound Swiss, we should buy every time the 20 moving average crosses the 50 moving average upwards, and we should sell when the 20 moving average crosses the 50 moving average downwards. Quite logical, right? Let's check this out. I will go to the strategy builder. I will remove these indicators and I will add the moving average crossover, which is available right over here. So we have the 20 and the 50 moving averages, with the rule that the fast moving average crosses slow MA upward. That's a precise rule, I should admit. But if I accept it, you will see that this strategy is actually going for a margin call. And if I select not to close the position, but just depend on this rule over here, I will go for the reverse option, which means that every time I have a signal, I will be buying. If I see the opposite, I will be selling. So that's like a clear test for this moving average crossover, right? When the fast moving average crosses the slow moving average. This replicates this strategy for 100%, unless they forgot to give us some kind of secret detail. Okay, so I really hope you got my idea. I don't want to expose and make fun of the other YouTubers, not at all. They did a great job. They have millions of viewers and they win a lot of money from YouTube. That's why for me they are great YouTubers. Are they good traders? I have no idea. However, I decided to record this video, guys, and to prove to you that the moving average really doesn't work the way some traders present it, and it's just too easy for them to convince the audience that it works, because they pick some random examples over the charts, and with some drawings without proof and backtest, it sounds like really nice and profitable. And actually what they said in this best moving average strategy for day trading, they said that in some markets the market doesn't react after the MA crossover. Now, if you're familiar with the moving averages, they are calculated based on the previous closings of the bars, which means that the moving averages are actually following the market. It's not the market following the moving averages, and nobody should expect that because the indicators are calculated based on past prices, which means that they are following the market, not the opposite. However, with EI Studio and FSB Pro, the strategy builders we use in the academy, you can find some decent strategies with moving averages, but combined with other rules and exit conditions. Don't depend just on moving averages, because you're very likely to blow your account. I thank you guys for watching today's video. If you have found it useful, make sure you like the video, subscribe to the channel. I'll be super happy to see your thoughts in the comments below. Take care, have a wonderful day, and don't forget that I love you.